Welcome to Trading Lounge and the gold silver report for the 29th of March. So look, it really boils down, in my humble opinion, it boils down to, from this top here, that we either finish in 3 waves, which is valid, or we finish in 5 waves down here, which is also valid as well. So if we were going to finish in 5 waves, then this move up through here would be this one here as a wave 4 and then move down. If this was going to be a wave 4 rally here, we wouldn't want to see it moving any higher. So last time we spoke, we wouldn't want to see it moving above 1750. If 1750 became the support, then we would be on the long side of the market. If it fails from here and moves down, then the 1720 as a retested resistance would give it a bias to the downside of completing this 5th wave down here. That's really as simple as I can get it. I have changed the count on silver a little bit in terms of a bullish count, so I think that that's interesting. That would be the interesting point today. But we'll just run through these 2 scenarios first. Yeah, pretty much no change from last time we spoke. So in the downside, I've actually got 2 wave structures that can play out. There's this one where we have wave 4 here and down for wave 5 of wave 3 here and 4 and 5. That would be this one here. The other one is just got one move down into this point and then moves up from that low here, having this an A and a B and then 1, 2, 3, 4 and 5 here. So we'd need that 1720 as the retested resistance to help confirm these moves, and these moves are quite valid because of these, well, especially of this current structure within here. It doesn't count very nicely as an impulse wave. Yes, it can be pushed into that, but yeah. So on the bullish side, I think we're here for this. So there's different ways of counting this, of course. I don't think it really sort of matters, because either way that you look at it, it's not that clear either. I mean, you can become a believer in a particular pattern, and that's fine, but you need to know at what point you're going to be wrong within that pattern. So from this low here to this high here, the 61.8% is, well, sort of just above or around the 1720. So this orange line here, this 72 as I call it, we wouldn't want to see that becoming the retested resistance. If that was the case, then we're going to be moving down from that point. I have to say though, the angle of this particular correction coming through here does remind me of being bullish rather than bearish. And apart from that little spike just here, it does count nicely down as as an A wave here, a B wave up here, then 1 and 2 and 3. Forget about the spike, 4 and then 5 down through here. So there is a good case for an A and a B and a C wave here, and then pushing higher from that point. But as we spoke last time, taking that high out here, you know, would be the catalyst to the upside, because that wave 4 here, that blue wave 4 that we've got sitting here, if that's part of, you know, down for wave 3 here, back for wave 4 here, we don't want to see it going down going up any further than it already is here, because it's roughly at the 50%. You know, 38.2% is close to 40, so 40-50% is fine for a wave 4, but we wouldn't want to see it going any higher. And also too, it would start to overlap this move down here, which would be wave 1 at that point. So you could probably go long before that, but the safe trade would be at 1750, a breach above that point on that side of it. We can also look at it in different ways as that leading triangle as well. I've still got it here as this one, but yeah, I see this move down through here is in 5 waves here. So an A wave, a B wave on 1 and 2 and 3 here and 4 here, and then down for 5, and forgetting about that spike there. The main traffic was really in this space here, so taking a little bit of liberty there, but I prefer to be philosophical about spikes and always look at where the main trend channel is as such. You know, big orders and weird things can come in the markets, in the derivative market, on the paper side of things. So yeah, we take that with a pinch of salt. But we're sitting right on this 720 here, so we really don't want to see the market drop anywhere below that 1720 at that point. And it would also look for the retested resistance as we spoke here before, so the market would come down, bounce, move through, come back and check it, and then take the low out. Because if this number 2 here within group 1, 1, 2 and 3 here, group 1 of 1700, if that becomes the resistance, it's quite normal at that point for the market to be pulled down to the closest largest number. And if it pulls down here, then it's really going to, you know, give all of this overlapping wave structures at that point. So yeah, we can count that as impulsive. We can count that as impulsive. We can count this as an A and a B and a C wave here. Yeah, so in a way it looks a little bit bullish based on this move through here. I guess one way to sort of look at it as well, if we take this top of wave B and the low of wave C there, then we've got the 50-60% at that point there. Just remove that now. Try to clean that up a bit. So if you wanted to go long and you're okay with the risk, then you would need that top there as the resistance at that point. I mean, as the support. So you could go long there if you wanted to through here for that, based on that there, because it shouldn't go, if it's going to be bearish, it shouldn't really go any higher than that 1737 there. That's where it should stop. And there's a good case of that too. You can see the history here with that. So getting support on that, getting support on the 1737 little classic trading levels pattern there, you could go long from that point, waiting for the first high above the level, of course, and then just waiting for that to play out at that point. Sometimes it's a nice picture, sometimes it's not, so I'll just put it on the top of the high there for that. So really we're just allowing it to play out, but yeah, I mean, normally in a correction, the A wave is sharp and then the C wave is on an angle. So it's sort of telling me that it's like bullish, but we'll see. And of course, this is the short trade down here for that. Now, if we were going to look at, you know, because if this is going, let's just imagine for a moment this is going to be bullish here. I don't know that, but if it is, then where would that leave silver is the question. And I'm just sort of come back to my old count here, but just readjusted a little bit. I'm still happy with wave 3 being up here, an A and a B and 1 and 2 and 3 and an A, B, C, D, E here for 4 and down for 5 here. So I'm happy with my A, B and C here for wave 4. And we were chuffing along here quite nicely with a bit of an impulse wave to the upside. I know that we can look at this as a bearish pattern, but you know, when I look at some of the ETFs and that, it counts quite nicely as 1 and 2 here, and 3 here, and 4 here, and then 1 and 2 here. And then this third wave here is where it got a bit warped here by the Wall Street boys. But it came back into the trend channel here as such, you know, so this trend channel here. You know, it just came back here, and that's what it normally does as well. I mean, it was the same thing when Elon Musk, you know, bought Bitcoin. It did the same thing. It popped up, but then it came back into its trend channel and continued its pattern. So it's like a little missing a heartbeat there in a way. So I think it's fine to. I know that everybody's got strong opinions in the market, and that's you know, not here nor there, but I think it's okay to think out of the box a little bit. So having from this low here and looking at this as wave 1 up here, and looking from wave 4 here as 1 and 2, and this would be a third of a third in here, pulling back to the fourth, and then looking at 3, 4, and 5 here for the third and the fourth and the fifth here. And one of the things that I also like about this too is that if we take this low here and put it on top of this wave 1 here for that, just roughly there, it really sits nicely on the 61.8% as wave 2 here, looking at it as an A and a B and a C wave here for wave 2. So it really sits in there nicely, hugs that space there for that quite nicely. So you know, this is pretty sort of high risk, but going long above this previous high here would be, I think it would be okay, because even if this was, if we look at the bearish side and this was down for 1 and back for 2 and down for 1 and back for 2, we would still expect this market to move up higher at this point. And if it was going to move up higher at this point, then gold would have to go with it as well. And then that would take gold up into that 50-60%, you know, up into the 1750 area. So this little area through here, if we went long here, then the market could just go to here and then drop from that point there. So we would need to manage the risk at that point. But yeah. Yeah, there's a good possibility for this. So let's just have a look here a little bit closer in this. This is just the hourly chart here. So the market has pulled back as an ABC for wave 2 right on the very close to the 61.8%. And this little move up through here, this can pull back down here. This could come down as the ABC here and then move up from that point. If it does that, let's just say that this is just the A wave here, which looks like the case, and has that there, then you could lower this one from the top here. I had it on the second high there, but you could also lower it down at that onto that high there next, especially if it dropped down here further and then got back up. So yeah, just keep an eye on that. That's the bullish side for this market. It does look like there's 5 waves in that first move there, so an A and a B and a C here for that. So even if you're going to short it, you'd still have to wait for this low to come in place here. Copy that and then put that under that low there as such. And then if the market came down from that point, then you'd be on the short side from that point. So all we're really doing is, whichever way you look at it, we're looking at working a trade off the $25 point here, because it's either going to go one way or the other, isn't it? So it doesn't really matter which way it goes. It's just really a matter of being on the right side at the right time. This is the other count here that was more bearish. Looking at this as a wave B up here, if you're going to include that, and then looking down at 1 and 2 here, and then down at 1 and 2 here, and then we'd also need to look at this as 1 and 2 as well. So we would need to take that down to another degree lower here as well, and then the wave 2 back here again. But I'll put that there, and we'll just clean up some of this. Leave that there, I guess, but taking that high to here. So we should get some sort of rally in this space. There we go, up to here. That would be good because it would meet that block of supply there, you know. So that's where we should get a rally to. So it can move to this point here and then move down from that point. So I'll just move this across a little bit at this stage. Well, it could go straight up from there, but as I mentioned, that looks a bit down there, so it could come down to here first and then push up to there. If it makes this low here, then you can use that low, but then if it pushes back up there, don't use that low. Use this next, you have to use the next one over here. It's kind of like using that one, you know, it becomes a bit old hat at that point. It's not, you have better connection with the previous wave count rather than too far away. So you'd need to use this one over here for that. But still, if there was a mistake there, if that one was under there and it just went up to that point and dropped at that point, then you would use, you know, obviously use that one at that point. You don't want it getting away on you at that stage. So this would be the bearish count at this point. Yeah, sorry I can't give you a proper clean answer on all of this at the moment. All I can do is really just look at everything and then, you know, try and figure out what's what in all of this and come up with some answers. But yeah, I'm just not clear, but we should be able to work a trade off the $25 mark here. Alrighty, I'll just leave it at that. Thanks for tuning in. Cheers.